Everyone, and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap Friday's market action and discuss our game plan for tomorrow. But first up, we have a low floater for subscribers to kick the week off. This NASDAQ penny stock has a float of just 1 million shares according to FinViz. We see this as an undervalued situation, trading at just a fraction of its cash on hand. The report has already been released to subscribers. To get our reports, click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups in insiderfinancial.com. You can then also sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And in the welcome email, you will get a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging services are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat groups. With that said, let's dive in here. Well, I said in my tweet last night that I was going to wait and see what developed with Silicon Valley Bank. I got the news that I was waiting for. Treasury Secretary Janet Yellen, Fed Chair Jay Powell, and FDIC Chairman Martin Gruenberg Sunday said that depositors at shuttered Silicon Valley Bank will have access to all their funds on Monday. They added that taxpayers will not be on the hook for any losses incurred by the California bank. A joint statement said that Yellen, after consultation with the Fed, FDIC, and President Biden, has initiated actions allowing the FDIC to complete its resolution of Silicon Valley Bank. This statement also noted that state regulators took possession of New York-based Signature Bank on Sunday, though depositors will also have access to all of their funds with no expenses borne by taxpayers. Separately, the Fed on Sunday said it will make additional funding available to eligible depository institutions to help assure banks that have the ability to meet the need of their depositors. Dow futures are now up over almost 300 points as a result. So what happened? Well, Silicon Valley Bank is not your typical bank. It caters mostly to startups, VCs, and high net worth individuals. During the COVID pandemic, it had an influx of deposits, and over 95% of their depositors were over the $250,000 FDIC thresholders. These people deposit money but don't really need loans. So SVB didn't take depositors' money and loan it out like a typical bank would. Car loans, mortgages. Yes, it had some, but it needed to invest its depositors' money somewhere. So what the bank did is they went and bought treasuries and mortgage-backed securities. These are all tier 1 securities. They are safe. The problem is they bought longer duration, 10 years. So look at it this way. Imagine last summer they went and bought TLT. That is the iShares 20-plus year Treasury bond ETF. And now it's at 105, was down to as low as 100. So the bank was down, almost 20%, 15%, 18%, whatever, on that position. The problem is, if the bank holds to maturity, it will collect the interest rate, the interest payment, and get full value. The problem is in the short run, the Fed has been hiking interest rates. So as rates rise, prices of bonds come down. And what happened with Silicon Valley Bank was a classic bank run. Everyone tried to pull their money out at the same time. That's when the bank realized that because of its current loss on, say, TLT or these bonds, it cannot make everyone whole. Hence, the bank collapsed and the FDIC stepped in. And then this weekend, we got the backstop from Treasury and the Fed that there is no worry in having money in the banks. Because if they didn't do that, we would have bank runs across the country. And we focus here at insiderfinancial.com on, penny stocks, small caps, special situations. And, if your money isn't safe in the bank, there's no money to be made in anything, including trading penny stocks. So, what happened last week was a black swan, an unforeseen event. While this weekend's news is positive, I think there will be more jitters in the market. As they say, there's always more than one cockroach. So I think that we're still if you look at what happened in the Great Financial Crisis, Bear Stearns, Lehman Brothers, those events were not the lows. They were the events that cascaded and created more uncertainty, more fear. Markets are driven by fear and greed. There was a lot of fear on Friday. I think there was a lot of shorts. They went short, on Friday, thinking we were going to get a Black Monday type event, and now they're sweating it. They're nervous, going into Monday. See, what I like to do, and if I'm trading the overall market, I love reversals. Reversals are like just great. It's sort of like the no-brainer. Let's say if the futures are higher like tonight and into the morning, and all of a sudden the market opens, and all of a sudden the futures start weakening, and then all of a sudden they go negative. That's a reversal, and that's when we get these really big moves. And I would have actually preferred, it's early yet, so it's only 9 o'clock on the East Coast. What I prefer is the market just futures are way down, everyone's panicking, market opens at 9:30, and it's like, okay, we're down, let's say 1,000 on the futures. Well, there's nowhere to go. People are like, well, I'm not going to short more. I'm not going to panic. I'm going to buy the dip. And then you get that rally. I love those days, so let's see how, the market opens. But, I wanted to wait with this video and, see what the Fed and Treasury did with Silicon Valley Bank, because, you can't trade anything if you don't know, is your money safe in the bank? There were people freaking out over Silicon Valley Bank. I don't know if you listened to the All In podcast, David Sachs. He's just been screaming, we need our money, we need our money. And, it's like all these libertarians, now all of a sudden are asking for, bank bailouts. And, let me see, the banks are not going to be bailed out. The shareholders are all going to lose their money in these bank stocks. But the depositors, if you had $5 million, if you were a VC or if you were a startup company, you had your funding at Silicon Valley Bank, 5 million, 10 million, you can't spread that amount of money, across 50 banks, 100 banks, to meet that $250,000 FDIC insurance. It's just a ridiculously low number in today's day and age. It made sense in the 80s, but it doesn't make sense right now. And how am I looking to play it this week? Well, I'm expecting a lot more volatility, as I said, up and down. You have to be selective with your stock picks. This is certainly a stock picker's market. I don't want to own financials, but they can be great trades. Here's a couple that I have on my radar screen for this week. PACW, look at this, 24 down to $12. NYCB, this was $9 last week, down to $7. FRC was 120, dropped all the way down to $45, bounced back to $81. Great opportunities intraday. Western Alliance, WAL, dropped from $72 down to $30, closed at $49. These are great swings, but I wouldn't be holding anything overnight. These are just intraday trades. Look at SBNY. I think a lot of people were buying the dip on this one, and they're going to get wiped out. Signature Bank here was Jim Cramer's top pick last year. The bank was just seized and closed by regulators. Inverse Cramer never fails, SBNY. So it really is, the inverse Cramer is just one of the best indicators right now out there. In terms of penny stocks, I still like penny stocks with catalysts, low floats, short squeezes, and particularly insider buying. First up is FIGS, Figs Incorporated. Just a $1 billion market cap, and it's just been a lot of recent insider buying. The CEO, Catherine Spear, she's bought almost $5 million in the market. Just recently here at $6. We're trading at $5.90, so right here at this level. She's the CEO. She knows what's going on, and she put $5 million of her own hard-earned cash on the line here. So certainly FIGS is an interesting play. And when insiders are buying stock like this, again, especially the CEO, directors, they know the inner workings of the company. They know stuff is happening. They know the state of the business better than any of us can do by just reading the annual reports, the 10Ks, looking at the balance sheets. They know that there's catalysts, and they're putting their own hard-earned money on the line. So certainly these types of plays are interesting for me right now. SMMT, just a $314 million market cap, trading at $1.49. A lot of recent insider buying. March 8th, the co-CEO right here at 105 bought almost $17 million worth of stock. March 8th, so $26 million insider buy by the co-CEO at 105. That is a very significant buy. This is a biotech, so again, he's putting his money on the line. There's catalysts coming up in SMMT. Put this one on your radar screen. A little bit bigger than it's certainly not a penny stock, $6 billion market cap, but Dish really been beaten down here. It's 68% off its 52-week high, and you got a director, James DeFranco. He has just been buying stock all year, from as high as $20 all the way down here to $10.84. Just been accumulating a position. We're right here at $10.53. Undervalued play. Certainly Dish, Charlie Ergen, he knows what he's doing there. Smart guy, co-founder, executive chairman. So again, certainly this is a play here worth watching, possibly for the longer term. And then ENVX, certainly an interesting play here. I'm following this because of TJ Rogers. He's well known in Silicon Valley. He was last year buying $8.85 to $9, and there's been no buying since, but he just made another buy at $9.56. So if you look at his history of buying, it was at this level, ran all the way to 24. He didn't sell, and he's back here buying again. So I'm looking here. Yes, no sales from TJ Rogers, but again, this is the area that he comes in and buys, and then last year we got the spike up to $24. So ENVX, put this one on your radar screen. Could be certainly a lot of interesting here, and we'll be doing more deep dives on InsiderFinancial.com. For those of you if want more information, we'll be doing research on these on InsiderFinancial.com. So make sure you click that link in the description and sign up so that you don't miss any of our reports. And remember, we have a new report on a low floater. This one's trading just above $1 with a 1 million share float. The only way to get our report is by signing up. Click that link in the description, or go to signup.insiderfinancial.com, or sign up on any of the pop-ups on insiderfinancial.com. You can even sign up, unsubscribe. It's completely free, just to see the level of research we do here at insiderfinancial.com. And finally, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion, is meant for informational and educational purposes only, and does not provide investment advice. Thanks for watching. Also remember to smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys. Bye-bye.